Hello friends. Today I take this opportunity to discuss on the current market scenario. Currently we are into a market scenario where inflation is going high and the central banks are planning to increase the interests. To understand what is happening today, it is very important for us to understand what happened in the past. In the financial crisis of 2008, the central banks printed a lot of money in the name of quantitative easing. This made cash very cheaply and readily available to the corporates, which supported the economy, and we saw a rally from the lows quite immediately in almost all the asset classes. Coming back to 2020, we have seen COVID crisis where government literally distributed cash freely to all its citizens, almost all its citizens, to make sure their survival is intact. Additionally, the interest rates were damn cheap and a lot of countries were having even negative interest rates. This gave a boost to the economy. The demand structure increased. As a result of that, today we are seeing the consequences of the higher inflation rates, where the government is having an issue to manage those kind of inflations. Due to COVID, a lot of companies started the culture of work from home. Due to this, a lot of employees who started working from their native places saved a lot of amount on rents. So this rent added to that cheap cash available, which increased the risk-taking appetite of the investors. A lot of investors and traders came into all the markets, right from commodities to equities to cryptos. We saw a good rally during this tenure in majorly all the asset classes. When the money is cheap, a lot of investors do not prefer to invest in fixed deposits. They rather prefer some assets like commodities, cryptos, gold, equity, and real estate. With all the asset classes going up, it gave a feeling of making profits in these asset classes was very simple. So everybody wanted to take a pie of this. So a lot of traders or short-term investors who didn't knew anything about investing, they also started investing into the stock market, and making money became so simple for them. This gave a rise to the higher valuations of all the asset classes. This increase in inflation pressurizes the central banks to increase the interest rates. Central banks are those major institutes who are organizing the cash flows in a particular economy. For example, it is RBI in India, Federal Reserve in US, and all countries have their own central banks. So to conclude, inflation has a negative impact on the stock markets and a very positive impact for a long term for the profits of the companies. I feel in coming few quarters, we would find the inflation easing out a bit, the interest rates getting stable, and there would be a new trend which would arise in coming days. Now going ahead, what should be the approach towards investing? We should be very systematic, logical, long term, and we should invest in a very high quality investments. So that was all about it. Friends, if you like this video, please like, share with your friends and families, and do subscribe to our channel. Thank you.